Bitcoin's price could hit $250,000. Some analysts see a summer slump, while others are betting on a massive surge, citing Japan's economic woes and global liquidity as key factors. What do you think? Altcoin Daily, Cowen, Coin Bureau, Crypto Rover, and Lark Davis weigh in. Find out who's predicting what. In the latest video from Altcoin Daily, the host predicts Bitcoin could hit $150,000, $200,000, or even $250,000 by the end of 2025, citing Tom Lee's analysis linking Bitcoin's price to global liquidity and a potential dovish federal. He mentions that 95% of Bitcoin has been mined, but 95% of the world doesn't own it yet, suggesting a potential demand surge. He advises viewers not to fade Bitcoin, but to increase their holdings and look for altcoins gaining similar adoption and hitting big narratives like Ethereum and Solana with their staking features. He suggests altcoins like Sway, Supra, Injective, Swissborg, Human Protocol, Heart, and Cody as potential investments. He emphasizes the importance of having a profit-taking plan and not getting caught buying the top. While the host's enthusiasm is infectious, Bitcoin's price movement is notoriously unpredictable. The factors mentioned, such as global liquidity and Fed policy, definitely play a role, but so do countless other market forces, regulatory changes, and even plain old investor sentiment. The idea that the price will simply keep going up based on past performance is risky. It's intriguing to think about broader adoption and institutional interest driving demand, but relying solely on such predictions for investment decisions might be a gamble. The suggestion to identify altcoins echoing Bitcoin's success is a valid strategy, but careful research is still essential for each individual project. There's a lot of hype in this space, and it's wise to approach it with a balanced perspective. In the latest video from Crypto Rover, he discusses Bitcoin's price action, suggesting the bottom is in or forming around $92,000. He points to several indicators, including negative funding rates, large liquidity buildup, and the M2 money supply predicting a potential upward move next week. He references the CME gap filling up as a positive sign. He also discusses the historical patterns of Bitcoin's consolidation phases. He mentions his own trading strategy, opening up more trades on altcoins, and advises viewers to do their own research before investing. He notes that the video from 6 weeks prior predicted the bottom around $75,000. His ultimate price prediction target for Bitcoin is $140,000 by October. It's interesting how Crypto Rover connects Bitcoin's price movements to broader economic indicators like the M2 money supply. While this correlation might hold some weight, relying solely on such indicators can be risky. The crypto market is notoriously volatile, and various factors can influence price action. The mention of institutional investors accumulating Bitcoin through ETFs is a noteworthy point, as it suggests growing mainstream acceptance. However, as with any investment, it's important to exercise caution and not let FOMO, fear of missing out, drive decision-making. In the latest video from Lark Davis, Japan's economic situation is discussed. With a debt-to-GDP ratio over 250%, Japan faces challenges like an aging workforce, low birth rate, and slow economic growth. The video explains how Japan's economic woes could impact the global financial system, especially given its large holdings of U.S. debt and other foreign assets. The potential consequences of a Japanese economic collapse are explored, including a falling yen, bond market instability, and a global risk-off event. While the short-term outlook for Bitcoin and other assets is bearish in such a scenario, the video suggests that Bitcoin could benefit in the long term as people seek alternatives to traditional finance. The video also mentions a trading competition on FEMX with $5 million in prizes. Japan's economic situation is indeed concerning, and recent news reports about its shrinking economy further highlight the challenges it faces. While the video presents a dramatic picture of a potential collapse, the actual outcome is likely to be more nuanced. Japan has faced economic headwinds for a long time, yet it remains a major global player. The focus on Bitcoin as a potential safe haven is interesting, but it's important to remember that cryptocurrency markets are also volatile and react strongly to global events. In the latest video from Cowen's channel, he discusses Bitcoin's price action and speculates on its future movements. He notes the historical trend of pullbacks after golden crosses and points out that Bitcoin often experiences weakness in Q3. He observes that Bitcoin's current price action mirrors the patterns of 2023 and 2019, where it saw highs in the summer followed by declines in Q3. Cowen suggests that if Bitcoin doesn't break out by mid-June, we might see weakness in Q3 similar to previous years. He remains bullish on Bitcoin long-term, especially if it can break out of its current range, but acknowledges the possibility of a significant pullback if the Q3 weakness materializes. Cowen's analysis aligns with some broader market sentiment I've observed. There's a lot of discussion about the possibility of a summer slump in crypto, and historical patterns certainly suggest it's a possibility. The correlation between Bitcoin's price and past market cycles is intriguing, but it's crucial to remember that past performance is not indicative of future results. While Cowen presents compelling arguments for both bullish and bearish scenarios, the inherent volatility of Bitcoin means anything can happen. In the latest video from Coin Bureau, Nick discusses Bitcoin's recent price surge to a new all-time high of $111,980 and explores various price predictions for the rest of the cycle. He examines the increasingly bullish market conditions, including a surge in Bitcoin dominance to 65% and the unusual activity on Deribit Options Exchange, where a $300,000 call option for June has become popular. Nick dives into predictions from Standard Chartered, anticipating $200,000 by the end of 2025 and $500,000 by 2028-2029, citing whale accumulation and reallocation from U.S. assets, specifically highlighting massive ETF inflows and institutional adoption. He also notes Bitwise's similar $200,000 target for 2025 and $1 million for 2029, driven by institutional inflows and sovereign credit risks. Furthermore, Arthur Hayes suggests Bitcoin could reach $250,000 by year-end if the Federal Reserve pivots to quantitative easing, a view echoed by Robert Kiyosaki. Nick concludes with a cautionary note about risk management, especially amidst market excitement. The surge in institutional interest in Bitcoin is undeniable, and the projections discussed in the video, while ambitious, reflect this growing trend. However, it's important to remember that the crypto market is inherently volatile. The excitement surrounding Bitcoin's potential shouldn't overshadow the need for cautious investing and a thorough understanding of market dynamics. While the predictions presented are interesting, factors like regulatory changes and global economic conditions could significantly impact Bitcoin's trajectory.